Hi, welcome to the Market Alert for Friday, the 7th of November 2025. So stocks were slammed yesterday on lousy layoff data, losing the AI race and lamenting the government shutdown. And also there was a hawkish Fed speak from Waller as well during yesterday. So US stocks were sold amid weak labour data proxies and AI concerns. Challenger layoffs surged to a 7-month high, while Revelo Labs estimate for non-farm payrolls declined by 9k. Now this is an interesting one. I'll come back to that in just a second. Risk-off trade on soft jobs proxies while AI concerns mount. And again, this soft job proxies. The US government is still closed, but there's no sign of the non-farm payrolls to be released at 1:30 GMT. So very strange. So I've had a look around and see if they've already been released, but according to a search, they've not been released. But I don't know why they're missing from the Forex data there. So very strange. Right, let's have a look at the sell-off for the US markets yesterday afternoon and kick off with the Dow. So in the Dow, we've got a bit of climatic volume over the last few days. We're in the realms of oversold, but the market is holding at the 62-78% retracement there. Need to close back above the 20-bar moving average, and if those non-farm payrolls are to be released today, and they've just been missed off the Forex Factory, which is odd because they were there earlier in the week, or whether the US government will actually release them. If they're really bad, that could be the reason why they're not there. And because the government is shut down, they can hide how bad it could potentially be. So it's probably more the case why they've disappeared. But if they do release them, it will be interesting. That will be at 1:30. Yesterday, we saw a big sell-off in the Dow there yesterday, but a bit dead cat bounce there up to the S1. And then the market retracing there around 50% by the looks of things. So let's just have a quick look. Yeah, 62 is where they came back to. So the golden ratio and the buying coming in at this level, which you can see with the green there, and trying to move back overnight. In the German DAX, market is sideways sell-off yesterday in this market too. There's a lot of talk about AI starting to fall apart. Well, the stock prices fall apart, not necessarily AI. So again, the market's starting to buy this. And there is rumour of some sort of bailouts as well by banks starting to surface for some of these AI companies as well. So no surprise there, is it, with the way the valuations are. So the German DAX breaking the 200 MA but stopping at the DP for yesterday's early part of the session. We had a bounce, but you can see the market just failed to break the 200 MA and then following the Dow down and stopping with the climatic volume before then again coming back and retesting yesterday's low overnight, but the volume coming in once more and then moving to the upside. Now you think, well, the volume hasn't really come in, Keith, because the market shows this volume below the moving average. It's not a case of whether it's above or below the average, it's about whether it's green or olive green there, which shows demand, which you can see there as well, slowing prices. And the critical thing, of course, is at the low and then closing back above the 5-bar moving average. Got a cross in the stochastics, and now we're moving back to the upside there. Meanwhile, in the S&P, again, we continue with these lower highs. Same for yesterday. The market at 78% retracement. We're down by the 50 EMA. Bit of a clean out going on in the S&P. We've also got the market oversold. Again, you can see that olive green volume there down at the 50 or towards the 50 bar retracement. If you go from the last green line up to the last pink line at the top, you will see the market also stopping at that 78.89 level there, which is already in place, which I've already put on the chart. So down at 78% and the market holding there. Meanwhile, in the UK, the market sideways to lower yesterday, an inside bar inside the high and the low of Wednesday's bar. But overnight, the low has been tested, which you can see there. So a bit like the German DAX, the low has already been tested and starting to move up off this and back above the 200 MA as well. Yesterday, market trying to move higher. We had the Bank of England leave rates unchanged, and that's what that green spike is there. We then had a retracement back up before then moving down with the US trading session there. And in the US dollar, down sharply yesterday, but trying to find a bit of support overnight. That's going to be dependent on whether these non-farm payroll numbers are actually released or not. But let's have a look at the metals reaction for yesterday. So silver trying to move back to the upside yesterday. There is some resistance around at the moment. It will need to take out yesterday's high in order to move back. We need to get this market back above $50 an ounce before I'm convinced that the sideways move and consolidation is over, and it's not looking too bright on that front at the moment. 30-minute chart, and again you can see the advantage of being in control of the price fixing for the silver market as the LBMA strikes once more and sends the market down to the 47.68 level before bringing it back, and now we're heading back to yesterday's high. So an opportunity to buy more, as you can see there, again with the olive green demand bars trying to slow the market, and then followed by some selling, but again that sort of climatic action moving prices to the upside. What's interesting here as well in the 30-minute chart is breaking back through the high of the previous day. You can see it takes a lot more fuel to drive through this area. It's retested at the 50 EMA and the DP before moving it back to the upside. Meanwhile, gold very quiet at the moment, stuck in a tight sideways range. Again, you can see that here. Again, the LBMA taking advantage of moving the market down to Wednesday's close, but moving back to the upside, and again trying to get back through the previous day's high, needing a bit more fuel in order to close back above this level. So we'll look at the gold-silver ratio, and in the gold-silver ratio moving back to the downside once more. This is obviously showing that gold is lagging at the moment, more sideways and quiet than silver, which is moving to the upside, which is showing the gold-silver ratio moving back to the downside there. Right, let's have a quick look at yesterday's trades. So in the German DAX in the pre-market session, a bit of volatility to the upside before pulling back. We then get into the cash market open, which saw selling coming into the markets, which you can see there. We've got that cluster of volume. They tried to hold the market at this level, but then went on a bit further to the downside, as you can see there, trying to hold the markets, but not succeeding. We then have a potential sell signal, but the DP this time holds, with the market reversing. Shakeout accomplished, as I've said in most of the market alerts this week, at the conclusion that you can expect lower prices to begin with, get rid of those inflated and assisted futures prices overnight, and then bring the market down to start with as the selling takes place, and then bring the market back, which you see there managing to make its way back initially, but they're getting stuck into a range as we waited for the US markets to come on stream. And there we see the start in the afternoon. Again, prices moving to the downside following the sell signal, and then trying to move back to the upside, but the pressure in the US having an impact and moving prices down to the S1 before the close of the trading session there. Meanwhile, overnight prices are bullish, as you can see they're going above yesterday's close. We got all of the averages in the right direction, but that doesn't mean to say it's going to negate a potential move to the downside when we see the markets open, unless of course somebody already knows what these non-farm payroll numbers are. But it's most odd that we're not seeing this listed for today. I suspect it's just why it's, well, I don't know why it's been removed. There's no point in suspecting anything. I don't know why it's been removed, but it'll be interesting to see what happens at 1:30 GMT, and also what news we get from Zero Hedge with regard to this, because there's absolutely nothing there at the moment. It's most odd, to say the least. But then, of course, the US government is shut at the moment, the longest time in history as well. Right, that's it for this one. Let's see what happens during today. But as ever, thanks for watching. Have a great weekend, and see you in the next one.